Zacks Rank Buys, stocks with a short-term buy or strong buy recommendation. Now, here are more Zacks Rank Buys. Momentum stock time once again, where we consider two momentum stocks that want to present to you for your consideration. I say we, but it's Mike Vodicka, actually, who's our momentum stock analyst at Zacks.com. He does all the legwork on this particular feature. I'm just here for the ride. Manhatten Associates, MANH, the ticker symbol, is one of those momentum stocks that you want to talk about here. They develop and sell supply chain software solutions.
Yeah.
What does that mean, supply chain?
Well, just think about it like this. Companies produce an end product. Let's just say it's a company produces networking hardware like routers, switches, and hubs. And in order to build those products, they need to purchase materials, components from some sort of supplier.
Okay.
So what this company does is they develop software that enables those two business partners to better communicate with each other and better manage inventories, things of that nature.
I got it.
So it's a technology company that falls under the business intelligence category. They've been around since 1995, so they have a nice history. They have a global presence. They have good geographic diversification, and the market cap is $550 million. So not a huge company, but a decent size.
Sure.
This company is kind of interesting because I took a good look at their fourth quarter earnings results, which came out in early February, and I thought it kind of reminded me of what we've seen in general from the economy over the last year. What they said is that in the first half of the year, their business was a bit slow. They didn't have any million dollar deals, and their software licensing revenue came in at about $9 million. Second half of the year, they were able to pick up $5 million deals, and their licensing revenue ticked up to $26 million from $9 million. So you can see how the economy definitely affected their business. One of the analysts actually asked them. They said, what did you guys do differently? What's the secret? And the guy said, he's like, well, I'd like to tell you we did something different. It's like we were working hard, we were focused, but really is a reflection of the economy. So we're seeing those fundamentals play out in these companies. The actual results for the fourth quarter, we had earnings of 8 cents per share. That was 2 cents ahead of the Zacks consensus estimates. Their services business is really strong. They have really wide margins on their services business. The margins popped up to 53%, so that's a nice source of income for them.
Yep.
They got a nice balance sheet too. The balance sheet was up, or cash and short-term investments were up $30 million to $123 million during the period. So we saw some nice appreciation in that category. On the heels of the nice quarter, we saw a little bit of upward movement on estimates. Current year added 3 cents to 89 cents. The next year estimate is fairly bullish. It's pegged at $1.10. That would be a 23% earnings growth projection. That's a solid number right there too. From a valuation perspective, not exactly a cheap stock. It's trading with a forward PE multiple of 27 times right now. That's a premium to the market, but these technology companies tend to be a little pricier than some other stocks, so I guess that makes sense in that context. And then the last piece of the puzzle we go to is...
Show us the money.
is the chart. We saw shares of Manhattan bottom out in March with the market right about 14, and right now they are pressuring the 52-week high, which is about $25 after rebounding from a trend line earlier in the year. So
what does that mean, pressuring the high? Ready to surpass it?
Not necessarily ready to surpass it, but trying to make a run at it. Sometimes these stocks will need to test a key level, 2 or 3 times to finally push through. This is the first test here we've seen recently. So it could be deflected, but the trend is higher. So if it is deflected, it could go back for another test.
All right, so it's giving it a good shot.
Yeah, absolutely.
Shoe Carnival, SCVL, the ticker symbol on the NASDAQ, and we all know what they do.
Yes, we do. This plays into the kind of the value theme running through the consumer environment right now. These kinds of companies have done really well over the last year, and we're definitely see that play out with Shoe Carnival. This is just basically a discount shoe store, and they operate primarily in the Midwest and the South. They've been around since 1978, so they have a nice history. But they are a little bit smaller, only $231 million on the market cap, so kind of a smaller company. The company's third quarter results from early November were really solid. They saw year-over-year revenue growth, which is something that has been hard for a lot of companies to attain in the tough economy. They had a nice earnings beat of 59 cents per share. That was almost double the Zacks consensus estimate, so that was a really nice beat. They had some nice margin expansion. Gross margin was up 2 points to almost 30%, and their operating margin added 1.5%. So That was good too. We saw a really big revision on estimates come down the line after the quarter. Current year added 43 cents. That's up to $1.12. Next year estimates projecting 17% earnings growth. That's solid. Valuation picture still in check. It's only trading at 16 times. That's in line with the market. It's a nice valuation. And then finally, we're looking at the chart. We see shares recently rebounding from a trend line at $18, and they're within striking distance of the 52-week high, which is right above 20. So
Cool.
looking good.
Do you own either of these two?
No, I don't.
All right, check out more momentum stocks and stocks in other investing categories. Stock pick ideas, actually, at Zacks.com's homepage in the upper right-hand corner. We put 4 new ones up there for you each business day. With Mike Vodicka, I'm Terry Ruffalo.